All right, Rob, welcome to the BlockHash Podcast, live episode 202. How you doing today?
I'm doing great. Thanks for having me.
Yeah, pleasure to have you. Tell me a little bit more about yourself as we kind of get started with the show. I'm sure people are curious about who you are and what your background's like in the space. How did you find yourself immersed in this wonderful world of crypto and blockchain?
Yeah, so actually, I'm a serial entrepreneur. I'm a dotcom guy.
Okay.
Believe it or not, crazy. I actually started the very first financial service on the internet way back in 1993. It's the first stock quote server, first mutual funds site on the net. It was called Net Worth, and it was acquired by Intuit when I was around 29 years old. It was pre-Yahoo, pre-Netscape, pre-Google, way before Google. So I've been doing fintech companies for almost 30 years. Did another company in the AI space, sold it to Lycos. Lycos went public and then was sold to Telefonica. Did another company which was acquired by Nielsen. So I've been basically a serial entrepreneur. And when I saw blockchain emerge, my firm now, COSIMO Ventures, we've been around for a little over 7 years, almost 8 years. And when I saw blockchain emerge, I said, "Holy cow! This is the single largest value creation event in our lifetime. Like, this is way bigger, I believe, than the internet itself." So I've been doing this for a while, but now I'm on the investment side. We run a venture fund focused on blockchain.
Got it. Do you think do you feel like it's potentially bigger than the dot-com bubble in terms of, reach and technology?
Yeah, absolutely. When you think about the internet and how it's changed our life, right? The whole thing about the internet was really about decentralization, right? The internet itself, right, was designed to survive a nuclear attack. And the early phases of the internet was really about content and the decentralization of content. Kind of phase two was really about communication, right? Voice over IP. I did a company that was sold to Unity for voice over IP for video games called Vvox. And also about commerce, right? All of a sudden you've got decentralized commerce. When I grew up, I'm in my 50s. When I grew up, we had four television stations: ABC, NBC, CBS, and PBS. Now look at us, we're doing this live across the net. So when blockchain came out, it's really what it's about is decentralizing the finance part of it. It's the internet of money. It's the internet of trust, really. It's decentralized trust. So it's absolutely, I believe, the kind of the value layer that we're laying on top of on the internet, the decentralized value layer. It's massive, multi-trillion-dollar opportunity.
Yeah, it's a very exciting industry. A lot of money is pouring into it like crazy these days, which I imagine is why you guys want to get into the same line of business. So with COSIMO Ventures, what was the idea behind doing it? Was it just wanting to invest in this space and seeing the same opportunity, or did you want to be more actively involved?
Yeah, my partners and I, there's four of us total. My three other partners, we always say, man, we've seen this movie before. We've been in this movie before. We know how this movie ends. And we saw the alpha. We saw the investment returns that were generated in the internet era and in the mobile era in 2008. And we just said, if you're not investing in this space right now, you're going to miss out on massive amount of alpha, massive amount of return. And, part of investing is really about market timing, because, we've all been too early, right? Where, you invest and then, oh man, right? And then we've all been too late, where all the alpha kind of moves out. And what we try to do is look at the market timing and say, when is the best time to jump in? And, throughout history, if you look at kind of product adoption cycles, it generally goes from kind of the visionary, right, which is around 5% of the market, to, kind of the early adopters, which is another 10% of the market. And then there's this magic moment where the visionaries and the early adopters, 15% of the market, all of a sudden the mainstream, the early, the kind of early majority gets in. And when that happens, man, you cross the chasm, as Jeff Moore says, you go inside that tornado and you're off. That's where all the alpha is, all the investment return is at scale. And I think if you look at all the numbers, we're right at that point now. We're early. We're absolutely early, but we're right at that 12 to 15%, depends on who you talk about. So as investors, now really is, the time to jump in. I was on the plane flying back last night. Guy sitting next to me, and we're talking, and we're talking about crypto and stuff. Obviously, he asked me what I was doing, and he says, "Man," he goes, "I should have bought. I'm late to the party." I said, "No, you're not, man. This is the first inning. This is only getting going." So we created a fund to really give investors early access to this. A lot of people, they jump in kind of later as these companies become more mature, as these projects become more mature. What we try to do is create a situation where you invest in a fund, it's diversified, and you get that early access and exposure to these projects. Hopefully before they get listed, right? You're getting them at a discount to that listing price.
Where do you think you explained kind of where we are on the adoption scale, but how long do you think that period of time is going to last? Because it's kind of felt like that for a while. Obviously, things are starting to really head uphill and people are diving into it like crazy. But how long do you think this period is going to last before, it starts getting crazy and parabolic? And
isn't that the magic? Isn't that the $1 trillion question, right?
Yeah, I guess so.
Look, I don't have a crystal ball, but from my perspective, I look at the history, right? I look at what happened with dotcom. I look at what happened with mobile, with e-commerce, and this is playing out very similar to those, but in an accelerated fashion. The internet actually didn't have the benefit of the internet to promote itself, right? You had Steve Case mailing out, CDs to jump on America Online, right? In every magazine and everywhere to get online, whereas now everybody is online. So, I think this is going to accelerate much faster. If you look at how the internet played out, it was really around 25 years for it to really reach maturity. I would say if you look at kind of mobile, it was around half that to really get to maturity. I would say this is probably in that 5 to 10 year range to roll at scale. There's some key things that have to happen here. Regulation, for instance, the mainstream, the mainstream majority is afraid. They're risk adverse. And so a lot of people say, "Oh man, the regulators and they're coming in and it's crazy." But I actually think it's a good thing, because what it does is it provides security and guardrails and trust in the ecosystem for the majority that want to come online. When there's regulatory clarity, every single time there's been some kind of regulatory clarity, the markets have just, gone up. More new money has been coming into the market. So kind of long-winded answer to your question, but I think it's probably 5 to 10 years. I think we're, like I said, about, first inning, 15% of the market's coming in, the institutional money's flooding in. And then you got the macro, right? The macro is we're devaluing our currency. It's a global market, the pandemic, people are losing faith in their reserve currencies, et cetera. That'll drive it faster.
Would you say you're pro regs then, if you believe that?
I am. I'm not pro stupid regs.
Okay, fair enough. We get a lot of those, unfortunately.
When our regulators aren't generally. I think the regulators, at least in the U.S., are taking a pretty informed approach. So I haven't, I feel pretty good about that. But I'm always scared of, these kind of blanket, ridiculous kind of regulations that just don't help anybody. So for me, I'm all about how do we get mainstream into this. It's just like the early days of the internet. It's just nothing's changed, right? In the early days of the internet, it was hard to get on the internet, right? Like, you had to download this software and that software, and you had to dial up through a modem. I mean, you had to jump through hoops. And then what happens is all those problems look, I'm an entrepreneur and investor. For me, every problem, I always look at the flip side of that. Okay. Every problem equals opportunity. Opportunity equals entrepreneurial opportunity to make, to make investment returns. So, in the early days of the internet, all those problems were solved, and the people who solved them made incredible investment returns. Same thing here, right? It's difficult right now, but it's getting easier and getting easier, and it will get easier. It'll get safer. It'll get more risk-free. And then, that's all part of the growth. And what we want to do is invest in those companies and in those projects that are solving those problems.
What would you say is the biggest correlation then between what you experienced in the dot-com bubble versus what you're experiencing now in the crypto, blockchain, fintech kind of revolution or bubble, or whatever your view of it is? What's that correlation that you think maybe is similar, or if you think it's completely different?
I'll tell you how it's similar, and I'll tell you how it's different.
Okay.
It's similar in that the adoption is going along that traditional kind of product diffusion theory, right? S-curve growth. It's very similar to that. It's very similar to how essentially everything we're building here are networks, right? Everything in blockchain is really about networks and the network effect, and that's similar to how it happened in .com. What's different here is it's global. It's not limited to Boston, New York, and Silicon Valley. Like, this is worldwide. In fact, the majority of stuff is happening outside the US, so it's global. And it's also, it's way more liquid. So, if you look at the traditional venture capital kind of timeline, right, you invest in a company in a seed round, a series A, a series B, you keep investing. The average harvest period for an exit in VC is around 5 years, 4.5 years, 4.6 years. The average time to get to unicorn status, I think, is around 10 years, maybe 8 years. And I think the average time to harvest off unicorn is in the teens, maybe 12 to 15 years. Most of these crypto projects are getting some sort of liquidity event within 1, 2, 3 years, and they're massive liquidity events. And so that has to change how you think about it as investors. The other thing is that now there's access. We created a venture fund where outside the U.S. it's a security. It's not it's a Reg D 506C security in terms of the SEC and FINRA, but outside of the U.S. $10,000 minimum investment, and you're investing in a venture fund. In the U.S. it's much more. You have to be accredited investor, et cetera. So it's different in that from an investor perspective, it's not just about doing this kind of 4-year investment period, hoping for liquidity at the end. The liquidity happens pretty fast, and you have to focus on what happens after you get liquidity. In VC land, a typical company, you do a bunch of investing and then you sell it and everybody kind of cashes out and everybody's happy. Here, after this thing becomes liquid, that's really when the real work happens, because that's when, you really got to deliver.
Gotcha. Tell me about some things that you guys invest in your portfolio, or what you have invested in, or things maybe you want to invest in or are investing in. What does that kind of look like?
Yeah, I think we have around 15, 18 opportunities. We're doing maybe 1 or 2 a month. What we're all about is getting early access to these deals, and we're getting access by meeting the founders, working with the founders, getting involved, bringing kind of our entrepreneurial values to the table. We were early in on Casper Labs. We love what they're doing. We also like the price bump they recently had. We really love the team, what they're doing there. We love Hedera. We think that, I'm a Carnegie Mellon guy. Those guys came out of Carnegie Mellon with Hashgraph. We think that blockchain is pretty incredible. We did a deal called Dust Networks, which is a privacy blockchain, which is pretty interesting. We really like what they're doing. Archax on the kind of global digital asset bank side out of London. NDAO, which is a really interesting currency. It's kind of one of the most interesting projects that people haven't they're getting awareness now. That's an adaptive currency, kind of like an Ampleforth type of thing, but it's not meant to be stable. It's a long-term store of value. They're doing some really cool stuff in the NFT space as well. Some other ones, Sovereign, Shift, Kibo. So, what we've really broken the market down into kind of, I would say, 6 segments, from the base layer protocols to, the infrastructure in between to, Web3. We're just starting to really jump into Web3 now.
Got it. Without picking favorites, what is most exciting for you, do you think, or that's going to come alive much more quickly?
So one of the areas that I'm very interested in that we're just now looking at is the NFT side, and I get frustrated when I hear people talking about NFTs because they're talking more about the NFTs themselves, and I'm not into that. What I believe NFTs are really about is decentralized digital rights management. Mm-hmm. So, we have, again, let's go back to my kind of early story, right? In the early days, you had these central, these towers. I call them, we're going from the tower, which is the central institutions of trust, to the square, which is the town square or the network of people in the town square all talking. That's what the world has been doing, right? And we did it with content. We did it with commerce. We've done it with communication. And now we're doing it with trust and financial transactions. So when you think about it, the old world of I'm a content creator, I go out and put it on a single tower and the tower pays me. That main firm pays me, to a world where our content lives everywhere. So what NFTs really are is about decentralizing those digital rights so that the digital rights, the contracts go with the media. And to me, that's profound. All these content creators will now be able to manage their own digital rights on their own and be able to distribute it across the world and get paid every time that digital media is traded, bought, sold, moved, watched, and then you can layer in all kinds of other rights to it, right? If I buy this, athletes NFT, I get a discount on a ticket, or if I buy a digital song, I actually get a cut of some of the royalties. There's all kinds of creative things that we haven't even explored yet that can happen with it. So that's one area I'm really excited in. Web3 as well. It's pretty exciting. DeFi is just insane, right? I mean, when we started looking at DeFi 2 years ago, it had about $1 billion locked up into it. I think I've read somewhere that the rate of asset accumulation in the decentralized finance side is doubling every 2 months. What's it, over 260 billion now? And I don't know. I checked maybe a month ago. It's probably double that. And
APYs are going up too. It's crazy.
It is.
They got so much liquidity pulling in. They're so automated. They're able to actually support like 13, 20% APYs. It's insane.
Right. That's right. And the whole macro behind that is really just insane.
Yeah, it's pretty crazy. I love NFTs too. I think that they're just kind of scratching the surface of what they will eventually be able to do for artists, athletes, celebrities, anyone that has a public image, anyone that has some type of proprietary song or video or whatever it may be. Royalties and rights, copyright, things like that will be very, very important.
Yeah. We're looking at some pretty cool stuff in that side. Mm-hmm. We did one deal. I don't think we can announce yet, but we're looking at a couple of others right now. So we're pretty excited about it.
Yeah, it's a very exciting industry. DeFi on its own is going to be a massive industry. I don't even think it's going to be a niche anymore, because you're talking about decentralizing all of finance. And they have already labeled all of finance CeFi, so they've already segregated it. So I think it's going to break off from blockchain as an industry. It's just going to be its own thing at some point. There's just so much money going into it, and it's crazy.
Yeah, that's exactly it. And I think, look, blockchain is going to affect everything, right? And our entire society, all our institutions in society are built on what? Trust, right? If I don't know you and you don't know me and we want to transact, what do? We use a middleman. And the middleman is somebody we trust. We use a broker when we're buying a house or a stock. We use, a bank when we're doing financial transactions. All of a sudden, we're using a network to do that. And so it's just gonna affect everything. It's really, from supply chain, it's really, it's a pretty, I don't sleep. I'm just so excited about it. And the most exciting thing for me is I believe there's DAO in this. Not to be kind of corny, but 50% of the world is unbanked. 50% of the world is unbanked. 50% of the people in the world.
Wild.
Okay. But 75% of the world have one of these. Okay. And unfortunately, 50% of those have prepaid because they don't have a bank to pay for it. But that's okay, because if you have one of these, now all of a sudden you're part of the financial ecosystem. That's going to change your life, right? You got some content creator in some remote part of the world who puts their media out there. They don't have a bank account, but they can put their media out there. They can put their NFTs out there. They can get their digital rights. And all of a sudden, they've got income.
Yeah, Wi-Fi is readily accessible just about everywhere in the world today, even in a developing or even a third world country. As long as you got one of these, you got a phone,
That's it.
You're connected. You're integrated. So the key is, getting on the phone, which is another surprising thing. I'm surprised we haven't seen more blockchain applications tailored to my phone, and they've all been based in the web browser or my computer. That's going to be a big leap that has to happen at some point. I'm kind of surprised by it.
Yeah, I think it's actually an issue with the phone manufacturers and what they're comfortable with having on the phone and what they're not, and what's their cut, quite frankly.
Can you imagine that though? Having at some point, it's going to happen. Imagine having a decentralized Uber on your phone, having decentralized Airbnb on your phone, a decentralized marketplace like Amazon or eBay on your phone.
Exactly.
Being able to do all these things, it's going to be pretty incredible once it happens.
I agree with that. I really agree. And that's what Web3 is all about, right? Is how do we move this? This puts the power in the hands of the people. I actually think it's kind of if you think about it, philosophically, it's a property. It's a digital property rights. It's a custodial kind of ownership rights revolution, right? If I put my money in the bank, who owns the money? Do you own it, or does the bank own it? Who's using it? The bank.
Well, it's not even money; it's bank credit.
That's right. It's bank credit.
9/10 of your dollar gets loaned out anyways.
That's right. And so, what happens if I'm a purported criminal? What is the first thing the government do? They freeze your account, right? They seize your assets. Whereas if I put Bitcoin in my wallet, not on an exchange, because they have it, but if I put Bitcoin in my wallet, who owns it? I do. And how do you know how much Bitcoin I have? So if I'm private about it and I don't tell anybody I have it, how are they going to seize it? Now, I'm not saying you want to do something nefarious. I'm just saying, I'm trying to illustrate that this is all about custodial property, person holding on to your property. It's cool stuff.
It is definitely cool stuff. It's very exciting. Another question, and then we'll kind of slowly start wrapping it up. This one I just kind of crossed my mind, thinking about what things DeFi is just kind of swallowing. And I was thinking about DAOs, decentralized autonomous organizations. Have you guys ever considered going down that route where maybe you set up like a DAO to do some kind of investing or funding alongside what you're doing with COSIMO, or even turning COSIMO into a DAO at some point? It's an interesting idea. I know a lot of funds are doing it.
Yeah, it is. It is an absolutely interesting idea. Ultimately, the reason why we haven't is so we tokenized our fund. COSIMO X is actually, and it's COSIMOX.com. We're actually one of the very first tokenized venture funds. I think we're the first evergreen tokenized fund, which means we're open-ended and we're always raising capital. And what happens is that when you invest in COSIMO, you get a token. It's a security token, and then you can trade that token. And as the assets of the fund rise, the token value rises. And if the fund goes down in value, the value of the token goes down. At the end of the day, when you raise a fund, you're raising money. So you got to talk to investors, and if investors are used to one thing, meaning the 10-year lockup J-curve VC fund, now all of a sudden you spring on them this whole concept of a token. They're going, wait a minute, this is a new market and a new, this token thing. I don't know, right? So adding another layer, which is this DAO concept, makes it even harder, right, to raise money. Do I believe it's going to happen? Yeah. Do I believe everything's going to move in that direction? Yes, I do. I just don't think that the investment market is ready. I think it's just now getting ready for the tokenized funds. What we're after with COSIMO, quite frankly, I mean, we have Rochester Institute of Technology, a major university in the U.S. in the fund, okay, which is great, and we want big institutions to come into the fund. But what we're really after is that group of investors who want to come into a fund and enjoy the same kind of things that these big institutions. So what we're trying to do is democratize. We're trying to give access to what has been historically big institutions and family office only kind of assets, right? Why should they enjoy all these incredible, opportunities alone just because they're writing a big check? So that's really what we're all about. But the DAO, I agree. I think, that's what this is all about. Every one of these blockchain projects is a network. That's what it is. We're building a network. It should be valued like a network. You should look at the growth, the growth profile like a network. You should evaluate it as a network. That's why a lot of these bigger ones are offering, huge ecosystem funds to get more people on the network, more people using it, more people that use it, more people that develop apps on those networks, the bigger the network gets.
Got it. Yeah, it makes sense too. I can see from your angle what you guys are trying to do. And I just see so many people going that route of using DAOs and whatnot. Are you guys allowing just anyone that has enough money to invest through COSIMO, or do they have to be accredited, or what's the
in
threshold?
the U.S.? Yeah, in the U.S. you have to be accredited investor. Yes, outside the U.S. depends on the jurisdiction, and that's another thing that's really cool about the blockchain. Right, what you do is you go out to we use Securitize, which is another great company. Securitize, we were I think one of their first customers, if not first or second customer. But you basically go out to Securitize, you do your KYC, AML, and then they determine through the systems, okay, in this jurisdiction you need to be accredited, in this jurisdiction you don't need to be. What's the minimum investment? And then all of that is basically embedded on the blockchain, so that if I'm a U.S. investor and I want to trade my COSIMO token to you, and you're a U.S. investor, then it makes sure that transaction is compliant. Got it.
Probably a good place for us to start wrapping up.
Sure.
We're going to need to move on to some other things today. But where can people go to follow you, of course, and also kind of keep up with things COSIMO is doing in terms of investments, putting things in their portfolio? I'm not sure if you guys put out any information or you have a blog or anything, but tell me where people should go.
Yeah, so I'm at Rob Frasca on Twitter, and you can go to COSIMO X, COSIMOX.com. That's our website on the fund. You can see our portfolio there, and there's a media page. We like to put our get our media out there. That's probably your best your best bet.
Perfect. I'll be sure to put all that stuff in the description below for the episode so they can easily find it. Rob, thank you for taking the time to come on.
Brandon, my
super
pleasure.
Appreciate it.
Yeah, thank you. It was a pleasure.
Yeah, and good conversation.
Yeah, appreciate it. Enjoy.
All right. Talk to you in the future.
Yep.
Bye.
Cheers.